Hi, everyone. How's everyone doing? So we have a big day here. How's everyone doing? Hi, Jess. How are you? Hello, Brock, Ren, Kevin, Shalom Alechem, Jeffrey, Mark, all my trading warrior brothers and sisters. Hugo, Money is here. Always good to have Money here. Hello, Michael. I'm doing good, Brock. Decent week. Glad you had a good week, Bonga. Paul, NG, Ivali, Samira, all my Jess, thank you. Yeah, 35.25 was a nice short on the S&Ps. So we also have NFP to deal with today. You know what NFP stands for today? New frickin' president. Okay, that's NFP day that we have, along with jobs. Nice, Brock. Yeah. Okay. All right. So a quick rundown. S&Ps are still above the 2-week off number. Not that far away. It's this little candle here.
Dale, we can't see your
Oh,
your
how about
charts.
resuming the share, Dale? How
There
about
you go.
that?
Thank you.
Huh?
Good morning,
Good morning, my good
my
friend
brother. My
Stelios.
brother.
Now it's a blank screen now. You see it?
No, you can see your chart now. Yeah.
Okay, Mark. Why don't you log back out and in? Okay, so anyway, great week in the S&Ps, but correction, way overdue. I'm thinking maybe back to 3405 here. And although it was rocky and whippy, I believe I've got my weekly reversal candle working in EG. Again, I did not get a 2-week reversal on it. I needed 90.96, but I'm sticking with it. Okay, so this looks good. I'm looking for much higher levels. I think that we actually could challenge this high that we had in 2020. Okay. Um, what else? US dollar yen took out the 78.6 level, really looks kind of terrible. Okay. So I was stopped out here. I was stopped out. I tried it at the wedge line and I tried to get back over. So this was an unsuccessful shot. But there were lots of good shots. And also, I was talking about oil. That was a feature to me all week with risk on. Okay. And this is risk on, right? When you say, and oil was managed to get above 61.8, but I went for it here. It's trying to hold again. I still have to, remain bearish as long as we're under this moving average. If you took the trade yesterday, you're doing okay. I was thinking about it this week. You know that I actually made money being short gold this week. Okay. And, you know, anytime I take a trade, I'm probing the market and protecting the trade and my capital. I never know when I pull the trigger if it's going to turn out to be a swing trade. So the importance of taking partial profits is if it's not a significant or important high or low that I'm trading, I still get paid and I still have a piece on in case it turns into something like a runner. So it's real easy to do. I mean, if you're not trying it, at least try it. Maybe on a demo account or low margin account. And probe and protect. I know where your mind's going, Steve Volge, when I say these two words, probe and protect. I'm talking about trading, okay, buddy? So you go into the trade and you take partial profits And I know it's not, to trail your stop to BE is not really a market stop. It's a money management stop. And there are times when I go to BE where the market picks it off. No, not that either, DJ. So, and if I would have used the market stop, I still would have been there for more equity. But you know how much pressure that takes off you in your trading? Because right away you move to the worst case scenario, you make money. If that's a worst case scenario, anytime you click your mouse, what a great worst case scenario to have, because I've lived through many more difficult, difficult scenarios. All right. So we have that going. I want to congratulate all the Bitcoin people. I was looking for, some type of top and a pullback. And I know gold's going crazy. So it had a great week. I just want to show one chart that's been a great tell. I mean, Newmont started coming out of the hole before gold did. Newmont peaked before gold did. All right. And this is what I'm looking for now in gold. Everyone see this? Newmont. So this was drive 1. This was drive 2, under 70. And here we go for drive 3. So 2-3 week lag. Okay. So I see a 3 drive to a top developing here. Let's see, just using some type of line here. See what we get. Okay. Up around 75, so that's still about 76. So you still have about $8 to the upside here in Newmont. And it's my bet that at least on the weekly, it's not going to confirm here. So, I notice when I listen to Blake and other traders that sometimes you may not know what correlated instruments are going to do. But if you have one instrument that gives you a clear picture, all right, you can use that instrument to trade off of other instruments. Okay. So I'm saying that up here around 77, we'll see where gold and silver is at that time. And looking at interest rates, this was a surprise to me this week too, was the big gap down after the election on the 10-year yield. That's your weekly. This was the gap from the election. And really, it changed the whole picture in one day. But it's still holding. And, I still think we're headed for higher yields. All right. This may have just been a shakeout day. And if that's the case, even though I was stopped out again for 60, I still have a hard time wanting to get short, although Greg was talking about 102. It's possible. Right now we're playing with the 78.6 level. I'll say this. If we get back inside this wedge, which it tried to do last night, I thought there was a chance it might. But back inside this wedge, back over 103.70, I wouldn't be short anymore. So this is another throw over. They happen all the time. They happen in EG. I actually bought the throw over here in EG. And then see what happened once it got back inside the formation. See that? So take heed of that. And watch out for this. You could take a screenshot. Okay. I really don't know what else to talk about. The dollar had a terrible week. I still see no sign of a bottom yet. I'm thinking, that we're probably going to go towards this line.
And there are complex issues involved in negative rates.
I'm sorry, guys. Negative rates. Who wants that? Okay. So, looks like we could trade 91.50 or so on this wedge line. There's no reason to be long the dollar here. All right. I thought we were going to have a breakout up here, but after the election, real negative week. Looks a lot like the end.
Yeah, I mean the dollar looks extremely vulnerable.
Yeah.
It
Yeah.
does.
So, that, and hats off to Paulie. He didn't get the, the blue wave with us, the Democrats. I'm sorry, I guess I gave it away, but people know, getting control of the Senate and even losing a few House seats. But he said the dollar was going to crack after the election, and that's exactly what he did.
Yogi's broadband question on negative rates is whether or not they would be effective.
Is that yours? Was that yours?
Yeah, that was mine.
That was your speaker? Okay.
I think so.
Just
yeah,
making
that's
sure.
all.
I was like, yesterday I was doing the daily roundup, and all of a sudden you can hear Amanda's voice, and I'm like, hey, and she's like, so she ended up talking to me, and everybody got to hear Amanda's voice on the daily roundup yesterday, because when she logs in as as one of the staff. So
Yeah.
that's pretty funny. But hey, Dale,
Yeah.
First of all, I appreciate all your comments regarding the markets, and especially the throwovers. And the dollar has been getting beat up this week. And I mean, look at the Swissy; it's below 90 cents.
Yeah.
You got the euro dollar almost above 119. Probably going to try to make a run for it today. And the dollar looks vulnerable. It just does. And we have non-farm payroll
Right.
today.
Yeah. What is 600 is the whisper number, 600,000.
Yeah, it's somewhere around there. I mean, I think the market's looking for 595. Let's see on Bloomberg. Let's see.
Yeah.
I've got I'll
And not much reaction from Paul's press conference or what he said yesterday.
No,
neutral
I don't-
yesterday.
No one expected much out of
Yeah.
that. Let's see. Today is the 6th. Let me go over to. Did I just miss it? Bloomberg's looking for 593. So unless it's an outsized number somehow, and I guess we got to watch for Canada too, because Canada, let's see, they're looking for. Let me see here. 75,000 jobs to be created. So, Canada is going to be on the radar going into today. I don't think it's going to matter so much. I'm going to tell you personally, and then I got to get into the charts because we have a few minutes just to work on our bias chart here. I'm pretty tired from the election. I'm pretty worn out. I really have I had a question from Brock today in our chat room, and he goes, "Hey Blake, what do you think about the possible voter fraud or whatever?" And you know what? I checked out yesterday. Do you know when I checked out, Dale?
No.
I watched Steve Bannon calling for heads on
sticks
on pikes. Fauci's head on a pike and should stick it up in front. And when I heard that, I was like, "Wow, I'm done. I'm really done." And it's, look, I don't care what I don't care what your opinions are here in the United States. I don't care what your opinion is. I honestly don't. So don't even write to me. But I'll tell you this much: when somebody has a voice like Steve Bannon, it's not right for him to say things like that. I don't even care in what context he was saying that. It's not right as an American. It's just
here.
It's a bunch of that is the biggest crap I've ever. I literally checked out yesterday. I'm like, you know what? I'm done.
They're inciting violence, Blake.
Yeah.
That's not patriotic.
It's not. I fought for this country. I'm a combat veteran, and that kind of stuff is just it's sickening to me.
Yeah, not much. It's the first time I've heard you upset like this about politics, you can usually brush things aside. So
Yeah,
if you're feeling this way about a comment like that, I know that, you know, it's not just me and maybe my partisanship that makes me want to throw up when I hear things like that.
Yeah. Oh, actually, FX Macro from my office, he just said the Guardian just reported that Steve Bannon is banned by Twitter for calling for Fauci's beheading. See, that type of rhetoric is so un-American. I cannot even explain how that is. I mean, voter fraud, you know, look, I live in a red state in Arizona. I mean,
Yeah.
don't you think I sit here and go, well, I thought all the votes were counted. How did 600,000 votes get dumped into our state? And I know Doug Ducey is in the pocket of Donald Trump. I know he is. I mean, you should see him when he comes into town. It's like, oh my God, the guy is like, you know, literally kissing his feet. So look, I can look at it both ways. I hear the stories both sides. You know, to me, it's like, yeah, well, you know, what can I do? I mean, I voted, I said my piece, but man, rhetoric like that, I can't stand for it. And I literally checked out last night. I'm like, give me a beer, and whatever happens, and it's out of my control. But that is disgusting. Disgusting. And if you are listening right now and you think that that's okay, you shouldn't be here. Please leave. I'm asking you, please, too. Okay.
Maybe FX Trader feels that way.
I don't care who you are. You know, if you
You know what I mean? Yeah.
that's appropriate, get the
Yeah.
hell out of my house. Get out of my house.
Yeah.
Okay.
All
I'm
right,
done.
buddy.
I'm
Okay.
sorry. I'm sorry,
It's
guys.
all right, man. Look, you know, it's an emotional time for us Americans, and you know, and this is happening with 120,000 COVID cases yesterday.
I'm a registered, Republican. I don't have to tell you how I voted this political cycle. It doesn't really matter. What matters is that is not right. It is just not right. Okay. All right. I'm
All right,
done.
buddy.
I'm getting into charts. That's it. Finished. Finito. Let's
Okay.
go. All right.
Okay,
So
buddy.
you're
So
above.
this is a breakout to you now,
Yeah, we're
Blake?
breaking out. We're above this trend line. This resistance right here.
Yeah.
That's 1882. I think we can get to the 78% retracement, but you have to imagine this is a range, guys. I know you're like, oh, well, the dollar is breaking down. It might very well be breaking down. It very well could be. I know some banks that are actually unloading above 119 today. So just so you know that, but they were the same banks that were selling yesterday when we hit above 118, or 118.50. They're out here selling here. They're selling again. So that, just because they might be selling a little bit today doesn't mean it's not going higher.
What's the rationale?
I know some traders that are unloading above 119, and they're probably, they're just like anybody else who's managing a position, so I just think that today 119.25 will come into play. Well, it could come into play on a break, but I just be careful chasing it higher. Look, we have a lot of event risk this weekend. If you think Donald Trump's out of this race, he's not. He isn't. Not by a long shot. Okay, so don't. I mean, I know all the betting sites say he's done and he's finished and blah blah blah, but he can raise a ruckus. He may. You may say, well, his chances of being president are slim to none. Fine, but that doesn't mean he's not going to be around raising ruckus for the next year or next several weeks, which in essence could really affect the markets. All right, so just and you're not going to get a concession speech from him. You're just not.
No.
So there's no way. No way. He's not going to.
Just mouthpieces, lawyers.
Yeah, I mean, he'll be probably if he does end up losing, he'll just leave. But he ain't going to give us concession speech. You see that, John McCain concession speech that has been going around. Everybody's passing it around like, everybody is. You're not going to get something like that. You're just not. You're not. No. It's not happening. So 118 is support for the euro. So that's why I'm saying, you know, whether you believe he can win or he can't win, I don't believe it's over yet. It's not over, right? Again, I don't care what you think. He's going to win. This is bullshit. He's going to lose. You know, there's no way he's done. I don't care. I'm just telling you, it's not over yet. So just be careful being too aggressive with your positions. Okay. When we're talking markets.
Great advice.
So here's the cable. Cable spiked up yesterday with the dollar weakness. I don't think there was anything really driving it, but I do have to just point out, we are really stuck in, you know, a range here. And, you know, if we break higher, which I think is possible, I just don't know with, you know, there's all this news that gets thrown around and Brexit, you know, you can see the 88% retracement has just been capping. Look at it just cap this rally from November 4th. I mean, the last 3 days just spikes, capped. This is like when you look at fibs, the 88% fib is the last line of defense for anybody defending the whatever the counter trend was, because they know once it breaks, there is the highest risk of extension now. So it's just holding.
Very few people use that 88.6, bro.
I've been using it for 20 years. So
well, you're one of the few. A lot of people, they stop at 78.6. Anyway.
I know. And they miss out on a lot too.
I know.
I believe 131.85. That was one of those, what's his name in Tucson that he's God, he's written books. I trained with him for
Larry Pesavento.
Pesavento. He taught me how to use that 88% fib level. I used to use protractors, Dale. I literally use protractors.
Yeah.
All right.
Okay.
Sorry. I got to continue on.
Right, buddy.
I can sit here with story time. It's Friday. I'm a little tired. I'm perturbed. 130.60 is support. Sorry, guys. You notice how I still have everything in range, but I'm going to tell you something. Look at this Aussie. Aussie's holding above 72.40. That's 72.90. 72.40. 72.90. Watch this. This is going to be massive if we squeeze here. This is all summer of the Kiwi dollar sitting above 65 cents all summer. And what is this? A 7-8 year trend line break? Let's go to the weekly chart. Let's see.
Great look.
Here's the weekly chart. Let's fix that. 2014. So it's a 6-year trend line, broke above. Yeah. How many people are short because the RBNZ is dovish? They're gonna cut rates. Well, look at the Kiwi. Do you think it cares? No. And it could really, on a move above 68 cents, squeeze. So I'm going to put 68, and we are threatening today to go bullish here. 68, and while we're above, shoot. I mean, you look around at the dollar. I mean, it is this is roughly 67.45. I'm just gonna write it down. Again, I'm trying to do this kind of quick. Dollar Canadian. We're in breakdown territory. I shorted it last night. I was at my kids' soccer at 130.85. 130.80, excuse me, because it was there. It's like, okay, well, that was the previous support. Current reason. I put my stops right above 131. Didn't even come close. And, you know, I'm just sitting in it, and it looks like a bear flag pattern. So while we're below 131.10, it's bearish. I'll have to finish the rest of this for you guys after the data, I think. 130.26. And I'll just write down 130.25.
We also have
support.
Canadian employment numbers today.
Correct. We have Canadian data. Correct. Yes. Thank you, Stel. And here's the dollar max really quick. So the dollar Mexican peso, I'm surprised we haven't had any follow through, honestly. I was looking at it here. Hold on. Let me do it this way. I was looking at it this way too. And I'm like, okay, well, we're in a descending channel. I can see that. And what I was really looking at is, some of these breakout points over here, that are coming into play because of previous resistance and all that stuff. So, does the dollar Mexican peso have some downside? It does, but I'm surprised we haven't slipped further. So I think if we get above 2090, you got to be a little careful with shorts. Oops, where's the dollar max? Support's going to be down 2050, whatever it is, 2050. Okay, and that's it. I'm gonna hold it at that. Stelios, Steve, good morning, guys. How are you?
Good morning, everybody. TGIF.
What's going on?
What's going on? I'd like to know the result of the election, but unfortunately not.
I feel like I know it. I just don't know all the drama that's going to follow yet.
Yep. Well, let's see. And frankly, this is a scenario where this uncertainty theoretically should be hurting risk, but it's clearly not. So anybody who can tell me why, I'll be grateful.
This is
a lot of things right now.
This,
so,
guys, has been one of the best examples. I remember, Blake, we talked about it like a couple of days ago at night when I was working. This is one of the best examples to realize how, how really not helpful are media in explaining what's up with the markets. I mean, during the election night and the day after, they literally had to change 3 times the narrative to match what's happening with the markets.
Well, okay. So look, I hear what you're saying, Steve. I hear what you're saying, but when you're put on the spot, I spent 4 hours a day, every day of the week before Forex Analytics, talking to 500 people on a webinar just like this, and I'd have to explain why, Blake, why did the dollar do this? Why did gold do that? Why did it do that? And you have to give them an answer. And sometimes your narrative has to change because, and people if you put somebody on Bloomberg or CNBC and they're not going to sit there and go, I don't know. You got a worldwide audience. Hey, Steve, what happened? I don't know. I mean, you're never going to go on TV again, ever.
No,
right?
I totally get it. But my point is, you have an initial narrative. For example, what we probably are getting at the moment, which is a Democrat White House with a Republican Senate, according to almost all of them, was the worst risk scenario pre-election, right? That was the worst pre-election scenario. And, after you get it and the markets don't respond negatively, I think the only thing that's left to say is that, listen, according to all logic that we could, apply, that was the worst type of scenario. Now, why are the markets still bid? Clearly because as it seems the market...
We have less than a minute.
Yeah, clearly because the markets don't pay so much attention as we thought on who's going to win the presidency and more on, for example, what the Fed does.
By the way, guys, if you have Forex Analytics, you got Data Flash too, which is this product right here. I'm going to pull up Bloomberg and Data Flash and just show you how quick this is. Where'd my Bloomberg go? Damn it. It's right here. Sorry, guys. I'm trying to do this quickly.
I love this contest.
And you failed.
No, here it is. Oh, wait. Oh,
yeah.
He made it on time.
Boom,
There we go.
Just as fast.
Same.
Look at that.
Yeah.
Yeah, and it's free for subscribers.
That's right. Hey, look, the market didn't move.
Just look at this. The market, the expectations having to do with
Jesus.
non-farm payrolls change keep coming more or less as expected, but unemployment keeps plunging a lot more than expected. Guess why that's the case?
People dropping out of the workforce.
Exactly, because people keep dropping out of the labor force. Yes.
So Canadian data came in a little worse than expected, but it doesn't really matter. Market doesn't care. Market doesn't care. Market doesn't care about anything but the election at this point, because it's really the overhanging risk, right? Because here, Steve, I'm gonna let you finish up what you're saying, but at this point in time, you know, based on like all the narratives out there, you know, I mean, I have been in the camp that if Donald Trump drags us out, things are going to get volatile, which is usually selling for the stock market. And I believe that to be the case. And it might end up being like next week. People are all looking at the market saying, hell, well, why is, you know, here's Donald Trump throwing out all these lawsuits, and yet, oh my God, yields are ripping right now. That means the yields are ripping. Stocks should really enjoy that, just so you guys know. Yields going up at this point in time are probably telling you that they're expecting, you know, economic activity to be a little bit better. So just so you guys watch that. Anyway, I was just going to say that you have regarding the wait, what was I just talking about? Sorry.
Yields.
No, before that.
We were talking about all the scenarios that had to change like 2-3 times within the 24 hours.
Yeah. You know, as far as like Donald Trump contesting the results, it as long as if he continues to drag this on, we're not breaking highs in the S&P. We're not going to break that 35 wherever we're at here, 35.25. We're not breaking that resistance until we know it's over. Like when we can say, you know, hey, he's packing his things, and he may not give a concession speech, but he's packing his things, and Joe Biden's moving in his transition team. Then the market might go, okay, hey, we can buy this. But if he continues to raise a ruckus, and, you know, I'm going to contest this, and I'm going to fight, and stocks might actually go lower, because I think the longer we drag this out, the more the risk is for violence to percolate here in the United States. And that's going to bring in some risk aversion.
Hey, Blake, our guest yesterday, Peter Goldstein, who's an Elliotician, thinks we could pull back all the way down near the base again before we blast off for new highs. Some type of Elliott flat or zigzag. You were here, Steve, for that, weren't you?
For what, Dale?
Peter Goldstein's interview yesterday.
I was for part of it, because then I had a meeting.
Okay, because he said we could pull back, and he's looking for, you know, 4,000 S&Ps eventually, but there's some kind of Elliott formation that could take it back towards where Blake has C labeled, and then go.
Yeah. So, I mean, we're still in a triangle, so theoretically speaking, we can still keep oscillating within the triangle before we break higher. Absolutely.
So that's, you know, just you know, you look at this straight line move and you think, oh, I should buy a fib retracement, but that pattern says, you know, you're going to get stopped out buying 38, 50, 61.8.
Although keep in mind, if you want to take the triangle interpretation, and if we get a pullback, that's going to be wave E. And wave E is usually the shortest of all.
Okay.
Which means that it can stop, for example, at 3,400 or so.
Okay. Yeah, there is a lot of support.
I mean, very frequently, wave E doesn't make it back to the trend line support of the triangle.
Hey, never, guys, Face, never listen to me when I talk about Elliott wave. I know just enough to be dangerous.
No, that's not true.
You know more than me.
Not when it comes to Elliott, man. All right.
I'd have to say, though, 3,400 should be nice support.
Yeah. Okay. I agree.
Let's see, 92.26. This is bearish. See, dollar Swiss is bearish now, and going back to your point, Steve, I know people's narratives change, but hey, you know, when you got to come up with a narrative for what's happening, people do it. I mean, I'm one of those people that have always said, I don't know, you know, like somebody when they ask me a question in the chat rooms, I'll be like, you know, I don't know the answer. I'll say, I don't know. I'm not sure. I don't worry about, I'm not.
I think the only
but
the only
people on
conclusion...
TV they have to come up with reason.
No, I agree, but
they won't be there anymore.
I think the only conclusion that makes sense, Blake, is that the market doesn't seem to be so much focused as we thought on who's going to be the next president, and more on, you know, what's the central bank policy, for example.
Yeah, but you know, I mean, Joe, here's the Joe Biden. Let's just say it happens. Joe Biden, you know, Republican Senate, Democratic House. You're just not going to have a situation where you have he can't push any extreme, you know, like he can't push any extreme ideas through for spending or anything. Taxes probably aren't going to get raised a whole lot. He's going to be limited in scope that what he can do. You're going to have both houses trying to, you know, push stimulus. You know, the guys in my office are like, man, that's a Goldilocks scenario.
I agree. I've said on this webinar before, but I never thought that the market would agree with me, to be honest, because usually it doesn't. That, in my opinion, politicians usually, the more they do, the more they hinder the economy. So the less they can do, it's the best case scenario, in my opinion. But, you know, I'm a libertarian in having to do with economics.
Well, maybe he can reach across the aisle. He's more of a uniter than a divider, if you just watch his demeanor. So, yeah, and he has done it in the past. He got TARP through, and that was bipartisan.
Yeah, I mean, you know,
I mean,
I hope he does as well as possible for the US. You know,
yeah.
That's the only thing we can all agree on, right?
Yeah.
All right, let me push this gold through really quick. So gold, this breakout above these highs, that has the hold. And as long as that holds, you got to just continue looking long gold.
Did you take profits on your long silver from a few days ago, Blake?
I did. Yeah, it was quick. It was intraday. So
great trade, man. And Steve, great call. I'm so glad I didn't get run over.
I'm glad you didn't as well. Thank you.
Yeah.
50% retracement, 1963. That'll be next up. All right, guys. There you go.
We have Ashraf Ladi here at the top of the hour.
I know. He's
going to yelling.
I know you guys got a lot to say. So.
He'll be yelling. Get your volume controls right.
I like him a lot.
Stelios, did you get your
I got it. I posted it already.
Thank you. All right, guys. Have a great
Speedy Gonzalez. Stelios Speedy Gonzalez.
See you guys later.
Have a good weekend, Blake.
You too.
So another day. We're still counting votes. Biden is up in Georgia now, right?
Yeah.
And apparently he's getting like over 80% of the mail-in ballots, which is we knew it's going to be on his side, but this difference is huge.
As it seems, that's the case for all states, with the exception of Arizona, if I've understood well. Arizona seems to be the only state that mail-in ballots actually benefit Trump.
Because they were used to doing that in Arizona. Republicans dropping it off. So, they were used to doing this. And most of the other states were not. So, when you think about it, it's President Trump himself that advise people not to mail in their ballots, but to show up and vote on
And vote in
election.
person. Yes.
Yeah. What Trump has been tweeting today, and he's complaining about how observers cannot go in to actually check that everything's being doing right, and he's going to go to court. So this theoretically is going to drag on, unfortunately for everybody. No matter what the result is, you want it to be clean, you want it to be done and dusted. And when is the inauguration? It's in January, isn't it?
20th of January, if I'm not mistaken.
Okay, so hopefully we'll know before then.
Yeah, there are some
it's
drop dead dates on certification.
I think it's
in December.
14th of December. I think is the
Yeah.
Okay.
Anyhow, personally, I believe that it's going to be over long before that.
I hope so.
My expectations,
one trade I hope you're really right on.
My expectation is that Biden is going to end up having more than 270. I mean, probably even comfortably more. And then challenging, many states, etc., is, a futile task. In which case, I believe that even the Republican Party is going to start pushing Trump to just, let it go. Yeah. And even if they don't manage to do that, once they also acknowledge that that's the result, I think that the market is going to move on, because there is no chance that Trump can challenge anything unless he can really prove his claims, and he will have to do it for more than one stage. And with, in essence, nobody backing him, I think it's a done deal. And I think that no matter how much it drags on, even weeks, the market is going to already price it in as, done. So personally, I'm not so much worried that whatever happens with the elections from this point on is going to, itself cause a lot of turmoil. In the short term, I think that given any type of opportunity, we might see a little bit of a profit taken. Yes, I mean that should be normal. We've had, a huge move higher. I mean, in a non-stop bid for the whole week. We're currently testing this trend line resistance once again. And as we said before, a little bit of a pullback here, perhaps even towards 3,400. I think it's going to be a very healthy pullback. But all in all, this still looks to me like a triangle. And, given the prior move higher, I think that, the chances are overwhelmingly for a continuation higher. And I really don't care what type of excuses people in the media are going to find to, in essence, justify what's happening. But I see a market that wants to move higher. And if the market wants to move higher, it's going to find a reason to move higher. Having said that, it's not that I'm advocating somebody should buy today resistance after a week that, we've more or less moved 10% higher, right? So, this is not the time and the place to buy. Let's see how we open the next week. And as I said, if we see a healthy pullback, probably that's going to be a much, much better opportunity. As you see, exactly what we have on the S&P, we have on the NASDAQ. Same formation, same area, same trend line we're testing, just a different chart, right? And these are the two most important charts having to do with risk. The NASDAQ, because we know that many of the NASDAQ stocks are the ones that have actually propelled the index higher. And speaking of which, look at the FANG index.
Yeah.
It had a nice move lower, but it proved that this was part of a larger correction, which is also a triangle. And the FANG index has actually already broken higher. It actually gapped higher yesterday. So bottom line, I think that the path of least resistance remains to the upside. And buying 3,400, in my opinion, is probably a good risk reward opportunity. Or alternatively, you can wait for a pullback and then with fresh momentum, buy a breakout from the triangle. So, both of these are viable options. But in any case, I would not be short risk in the medium term. I absolutely see no reason Having to do with the metals, yes, the metals have clearly broken out, in my opinion. We now have had a higher high in gold. You can clearly see it here, right? Comfortably higher high. Quite a monstrous day yesterday to the upside. We now have a higher high in silver as well, which I'm assuming this was the formation, a triangle here. So I think that the chances, I've been writing the end of week analysis, and since 2 weeks ago, what I was writing about gold and silver was that the chances of seeing a lower low keep decreasing by the day. So that's exactly what was happening. The more I was seeing price action and the more I was seeing both the metals being resilient and refusing to post a lower low, the more I believed that the chances are that the market is going to run away without ever satisfying first. So many people that were looking for one more low to buy. And I think that the chances are now quite low. So, if you're expecting one more low, I think most likely you're not getting one. So now it all remains to, deciding if you're willing to chase it higher, if you have some specific targets in case we get a pullback, for example. Probably, we're going to be lucky if we see a pullback. Let's take the case of gold. If we take if we get a pullback down to, I would say,
silver right now.
1930, or if you're really lucky, back to 1900. That's going to be a nice area. In the case of silver, back to 2480, or best case scenario like 2420.
Steve, do you remember the area that when Greg was here and showing gold the other day, that he said, would have to clear a certain price level to confirm that it was a 3 happening? Was it right around here in gold, around the 19? Do you remember? He said, I'd be careful up here.
I'm assuming, knowing how Elliott Wave works, and specifically the preferences of Grega, because everybody has his own style.
Right.
Grega is always applying the channel rule, that if a rebound is channeled, that can still show that the rebound is corrective. So my assumption, because I don't really remember, is what Grega would be looking for would be taking this low and this low, dragging out this trend line support, cloning it, forming a parallel, taking that high, and voila. You see?
Right, so we got through it. Okay.
No, not yet, because we might close negative on the day.
Yeah.
But even using that criteria, if we close positive on the day and on the week today,
then it's a 3.
Then we violated that, which means that we're probably in a wave 3, meaning that was wave 1.
Right.
So that interpretation would imply the following, since you're so much interested in Elliott waves. That would imply this. Sorry, again. So this was 0, this was A, this was B, a triangle B, this was C, you see?
Yeah.
And this is 1, 2, and 3 starting.
Okay.
Got it?
Yep. Thank you, man.
Yeah, my pleasure. So yeah, this parallel trend line should be like the final, test and confirmation that, yep, that's not a corrective move. So gold, silver breaking out. What about crude oil? Once again, crude oil seems to be, impressively unfazed. Having said that, we have both fulfilled the minimum expectations of a downside move, since we already have this ready. What would that be? That this is an A, this was a B, and this is a C. Shut up, Aliki.
Oh, you forgot to feed her again, huh?
Yeah, I should feed here to the dogs. That's what you mean. So, that's a very likely scenario, right? So if that's the case, which we should also see an acceleration higher in the case of crude, but the jury is still out in crude. I mean, you see how the price action is. It's very choppy. So there are alternative interpretations. So keep that in mind, okay?
Yeah.
Now,
I mean, just relative strength, the performance with risk on this week. Crude dogged it. You were talking about dogs. It really
yes,
dogged
but on the other hand, during a lot of the days in this consolidation period, it
Yeah.
also responded very nicely in days that we had risk off.
That's true.
So that's why I prefer to use the word unfazed, in the sense that it seems to have responded less than expected, during the past months in risk off, but in risk on as well.
Another correlation that is broken down.
It's not exactly broken, but let's say it has weakened.
Yeah. Okay.
So somebody else was asking about natural gas. Back to a zone of interest. 290 is a zone of interest. There's no question about it. And I think that from a a risk reward perspective, this is a great area to belong. As simple as that. 290 is important. It was acting as resistance multiple times in the past. You can clearly see it here, right? Before that, it actually acted as support once. We had a nice rebound. We breached through it. And once we breached through it, every single time we tested it since March of 2019, it always acted as resistance. So you have no reason to believe that it can't act once again as a support resistance area, as a pivot area in essence, in which case I think it's not a good idea shorting here. It's probably a better idea buying, and you can have a rather tight risk, and I think it has a decent chance of working out. So keep that in mind. Dale, I was late today. We have a lockdown starting tomorrow morning, so there was a lot of traffic. You want to see if there were any questions in the first 20 minutes of the webinar before I go to the questions that followed that. One of the questions that definitely followed that, and I intended to cover, by the way, has to do with the Chinese yuan. Here it is. And here it is. Look at it. Spike higher and a false breakout during the elections. And guess what? We're back at support. But it clearly remains in a downtrend. Right? By the way, there is a lot of news coming out that Biden has now taken the lead in Pennsylvania votes as well. As I said before, I think that Biden is going to win with more of an electorate difference than it would have seemed likely 24 hours ago, which I think weakens even further the case for Trump to manage to challenge it post-event. So USD Chinese yuan on support. So, act accordingly. I mean, this is not the place to sell once again. Now, if you see this descending channel breaking down, we might actually see an acceleration. But until that happens, if you're short, this is an area that you should trim, your expectations, because we might see another rebound. You can see that this channel has clearly worked out nicely, both as support and resistance multiple times. So no need to lose trust in it until it stops working, right? Let me go through some of the rest of your questions. Gold and silver we did cover. Steve cannot agree more with you about politicians. I assume that has to make the comment that the less they manage to do, the better for the economy. Yeah, I mean, I'm 100% a believer of that. I mean, I've seen it in action. I think the less they do, the better it is. I mean, it would be better if they just, did the opposite stuff than what they do. But, given of what they do, they'd rather not do anything. Look at the DAX, please. Yes, absolutely. Let's have a look at the DAX. So DAX has clearly also had a very, very nice rebound. Guess from where? The confluence of the 38.2% fib and the horizontal support resistance area. You can see it has, this zone has acted multiple times as support or resistance in the past. Now, it's probably a good idea if we also fib this, move lower to see where we currently are. Yeah, I assume that much. We've almost made it to the 61.8% fib and another horizontal support resistance zone. So once again, a nice rebound. Also look at this trend line resistance in the RSI, right? So once again, we've had a very nice rebound so far. I don't think this is the place you should be buying the DAX, but if we see something like this, we might see a continuation. But I do think that probably would be healthy to see at least, some type of a pullback before looking for higher prices. So not a place to buy here, but perhaps depends on how the price action unfolds, a move back towards 12,050, 12,060, if price behaves, in a nice manner, might be a good buying opportunity. So keep that in mind. Also, nobody asked, but it's a good segue to talk about the FTSE 100. We were looking at this, in my opinion, quite clearly corrective pattern in the FTSE and prolonged one. It's interesting that we had a false breakdown from this pattern, and then we've had this, big recovery. Should you be bullish? No, not as long as this trend line resistance is holding, and we're not yet there. But given if we do break higher from this trend line, especially given the fact that we also had a false breakdown first, I think that's going to be probably a nice signal that the FTSE might actually do well in the weeks ahead, right? So I think perhaps a very nice buying opportunity, but not yet. I would want to see trend line resistance break to the upside first. Dollar in retainer fees, got obstacles, it's a nice setup. Yes, I'm worried here. Richard says, yes, and it is why I'm worried here in the UK, because now they pay for everyone everything. Yep, that's the global trend at the moment. But future, I feel, is coming because of the government overspending and the BOE/QE in my bones. I agree with you, but unfortunately, there is no long-term plan. That's the problem. We had this conversation the other day, if you remember, that everybody now seems to agree that deficits and debt is a bad thing, but that's not something we should, have plans for at the moment, as it seems it's always a bad time to have plans and, make, like make some type of, forward-looking, strategy for how to tackle that. The only thing they seem to constantly agree on is that this is not the right time to do that. So yeah, and it's really bad for future generations, because no matter how much you just ignore a problem, that doesn't mean that the problem doesn't keep piling on. And we know how that ends. It ends that at some point, the problem becomes impossible to ignore at some point in the future. But, there is a lot of moral hazard in that. And the moral hazard is that, in essence, prior generations and the current generation are making decisions that are going to have huge repercussions in future generations that have no saying in it. Unfortunately, this is what's been happening on a global scale, right? I mean, I've, frequently accused the US of doing it even more than others, but it's a global phenomenon. Let me see. Oh, yeah. Actually, this is the way to finish up. Cryptocurrencies. They've really literally exploded higher. Is it a surprise? No, it isn't. Why? Because we kept saying that this trend line resistance in the case of Bitcoin was key. And we did break above it. And I think we're very clearly in a bullish trend. Ethereum, not as explosive as Bitcoin, but also, seems to have some catching up to do. So yeah, I do think that cryptocurrencies look good. I still don't really understand why they should benefit. But long ago, I stopped paying attention to things like if fundamentally it makes sense, simply because the market doesn't pay attention to it. And, so I tend to trust, technicals more, and technicals say that they're moving higher and they look impulsive and we should see more upside. So, it doesn't matter if I understand it or not. But, that's where the trend is.
Yep. Price is
Yeah,
price.
this is price. Yeah. As they said in the past, as Jesse Livermore said, you can't argue with the tape, right?
Yeah. You
Coach?
can, but yeah, you
Yeah,
can.
you can.
You're
but
going to
it's
lose
be
the argument.
Yeah, you're going to lose the argument, and along with the argument, you're going to lose your trading account.
Yeah.
Yeah. So, if you want to argue with the tape, you'd rather do it on a vocal level and not on an actual level, just betting your money on it.
Yeah.
And, it is what it is. I mean,
I like what Anthony Kanakis said. Do you know him? Sounds like a countryman. Let us all be happy. Let us all be happy and live within our means, even if we have to borrow the money to do it with. You know what's funny, Anthony? I've had to do it I've done that.
The funniest part of all is that we're still using the term borrow. It's like,
oh yeah,
I mean, it has in essence.
That implies that you're going to pay it back, right?
First of all, that. Second of all, it implies that much of it is coming from somebody else lending it to you, which unfortunately,
oh yeah, that's right,
has stopped being the case.
Yeah, we're lending it to ourselves for our grandchildren.
Actually, exactly. Actually, the best, coming back to what we were saying before, the best way to describe it is that we are borrowing consumption from future generations so we can do it now.
Yeah. Let them deal with it.
Yes. Exactly. And that's why, as I said before, it's extremely unethical. As in my opinion, it's extremely unethical, but that's a larger conversation.
Ride the Curve has another one. Wimpy used to say, I'll gladly pay you on Tuesday for a hamburger today.
Yeah. It's the same reason why, in my opinion, it's unfortunate and it's unethical issuing debt with a time horizon of, for example, 30 years. Somebody might say, 30 years, I mean, it's still within a lifespan of a human being. But on the other hand, how many taxpayers of today are not going to be paying taxes in 30 years from today? You know what I mean?
Ashraf's here now.
When this matures. Okay, so let's see what Ashraf has to say about all that.
Okay. Everyone stick around for Ashraf. Lottie, most people know who you are, buddy. I'm going to make you a panelist.
They do indeed.
Welcome back to Face, Ashraf.
There he is. He just unmuted himself. Ashraf.
Okay. Welcome back, Ashraf.
Thanks for having me, guys. How are you?
Oh,
good. Mate. How have you been?
Good.
Good. How historical. Here we are. Now we know who is the next president officially when we're together.
Well, that's what NFP stood for today. New frickin' president.
Yeah.
All right. So you remember how to share your screen, my trading warrior brother?
If you want, you can share your camera as well. It's up to you, Ashraf.
Yes. the camera. Let me do the camera first, people. I don't want people to think that I have something to hide, like where I'm born and where my taxes. But is that me?
I don't see in the background where you are born
Yeah,
or
there
where
you
your
are.
taxes
I
are.
see you. I see you,
Yeah,
buddy.
I don't have that cool. I should have put the nice background, that blue background. From
Oh
before.
yeah, you
Never
could have
mind.
kept it from the summit. So welcome back. You want to show some charts today too?
Yes, let's start with this.
Share screen.
And well, thanks for having me, guys. And
I have an even cooler background. There you go.
very nice, very nice.
Oh wow,
Wow.
This is
This is basically it's an office space that is very conveniently located next to the house and next to the school of the kids. So yeah.
Okay.
So
You're gonna start with silver here. The color of my hair.
Just want to make sure you can see this, and now
Yes.
you can let me just want to make sure you can see the email.
Yes.
And now you can see silver again. And now you can see.
We're still seeing the email.
And now you can see
yeah,
silver.
now we can see silver again. Yes.
Yeah, guys. Well, okay. So I don't know what you want to start with, but let's start with silver since we have silver here. And of course,
Okay.
I will welcome any questions that you guys have. And you know, for the last year, whenever I do these webinars, you know, many years ago, we used to talk about a lot of the fundamentals and explain things into interest rate differentials and so on and so forth. But the more you're increasingly involved in the market and in trading, and you really have to commit to your technical analysis. But as you all know, guys, technical analysis is a huge university with many faculties, with many schools. You know, people focus on price action, people focus on indicators, you know, the bottom part of the chart. Some people don't go beyond 15 minutes, and some people put so many, you know, lines and curves and so on. And there is no wrong and there is no right, but there's no right approach. But what I've been looking for me, an increasing factor, like so, basically a classic analysis using trend lines, using pattern recognition, you know, pattern. Not well. You can call it fractals or analogs, and I'll show you an amazing analog. I don't know if you guys saw it. Oh, and before I continue, it makes you sound smart, and if you applied it, you would have been a millionaire. But I decided not to apply it this time, and I'll show you what it is. You guys saw it. It was posted on Friday, and I didn't post it because I thought that the political realities and the fundamentals are gonna kind of take over. I don't know if you know which one I'm talking about. It's the one with the S&P and with the Dow and the VIX, and it did exactly the same the Friday before this election, the same thing it did the Friday before the 2016 election, and it was uncanny.
Interesting.
Actually, you know what? Since I'm sure some people are saying stop talking about it and start showing it, so let's just show it. And this is an example of a fractal or an analog. It is actually an analog, but I'll just show you what I mean by that. And so let me just show you this, and I'll run this by you guys. And so let me just.
Because Ashraf, I remember 2016. I stayed up that night, and futures went limit down after President Trump was elected, and then Carl Icahn left the party and went and bought $1 billion worth of futures. And you know, I really can't remember that S&P's limit down. I think that was the only time I've ever seen it. And I went to bed thinking, well, you know, it's going to be an ugly morning. Came in and it was almost unchanged on the day. Well, so, okay, here we go.
You see, Dale, it didn't. Well, that rally, that decline when he was pronounced the winner, Trump in 2016, the decline in gold, the rise in gold, and the decline in the rise in the dollar, and the fall in the stock market lasted, I think it was 8 minutes or 9 minutes.
Okay.
a huge turnaround. But let's just
Yeah.
focus on this because, and you know what? I'm going to take this off because if I leave it, whatever I say, people are not going to listen to it. So I'm going to put something boring like this, okay? Because I really want people to get my attention before I show the chart. So the chart is going to be huge and it's going to be revealing. But Dale, here is the thing. It shows that if you went through this analogy, you would have basically made made money, and it's an uncanny copy and paste of the same pattern 4 years later. Okay. Now you know as well as I do, as well as most of the listeners do, that we have been fed in our brains in the last 3 months that usually the October before the elections is one of the worst months, and November is a good month, right?
Yeah.
But what part of November? So it's the part after the elections, and I'll show you this now.
Did you ever hear that the Bears feast on Thanksgiving and the Bulls on Christmas?
Yes.
I mean, us older guys know these expressions that don't work anymore.
Yeah. Or
Anyway.
or maybe the Super Bowl indicator.
Oh yeah, that's another one.
Yeah.
Okay.
Which I still pay attention to it, but I'm not going to share that. It's a secret. It's just between you and me. Don't make sure nobody else hears it.
All right.
But let's look at this. And this is and the reason that I'm showing this, guys, is just to show you that these things, they work. And I'm going to show more examples, and hopefully we'll have more time. I should have more time. Actually, I have an interview in 30 minutes with an Arabic channel. So I'm going to make sure I'll wrap this up soon. But here is what it is. So basically, let's just focus on the lower part. Okay, the lower left. So the lower left was the Dow. Okay, so the lower left was the Dow on last Friday. So the Friday before the elections. And as you can see, it fell sharply. Okay, it fell sharply, but it stabilized at the 200-day moving average, which was at 26.2. And it did the same thing, and it stabilized in July 2020. And this is very similar to the 2016 election. You see this? This is a daily chart. Can you see that? So this is a series of like 10 or 11 consecutive declines in the Dow that stopped on the Friday before the 2016 elections, because the elections on Tuesday, November 16, were November the 8th. So basically, and then you had a rally, and you never looked back, right? But look at the VIX, and this is something for people if they want to, if they're using analog, if they're using fractals, or they're using recurring patterns. It's on a certain market. Have them recheck it on a market that is highly correlated, like the Dow and the VIX. So let's look at the same thing. So the Friday, so this is 2020. This is 2020 here, the VIX upper left. And so you spiked, you came down, and then you went down, and then you spiked in into October 30th. And where we are today, we are at 26 or 25. And this is the same thing. And this is today. This is 2016. This is 2016. Right. The Friday before the 2016 election. And look how uncanny it is, Dale.
It's really a nice analog. Really good look. Excellent looking historical analog.
And look at this high in the VIX, Dale. The high in the VIX is higher than the high of September. The same thing as this year. The high of the VIX is higher than the high of September, but lower than that of June. And it's uncanny. COVID, schmovid, whatever it is, it's this is higher than this, but it's lower than the high of June 2016. So never mind. So these things work, and you just have to have a huge.
Yeah, I wish I would have interviewed you last Friday.
Well, I showed this on Twitter and so on and so forth, and I will be honest with you. People are going to say, Ashraf, did you make money going? Did you put a blindfold? Did you put a blindfold and buy Dow? And well, I'll tell you what I did. I closed my shorts on Friday. Okay. And we have a WhatsApp group. We have a very active WhatsApp group where I was telling people on Friday, because listen, here's what happened on Friday. Let's look at the Dow. So this is the VIX, right?
Yep.
So this is the VIX right now. And I was telling people, don't get too excited with the Dow. On Friday, let me just bear with me a second, please. Bear with me a second.
You know, using that information to cover a short with the potential, having that knowledge of the analog, so you didn't reverse. I mean, when I come out of a position that works, and if I hadn't have come out of it, I would have given it all back, is a victory to me.
Absolutely. Thank you
all
very
right,
much.
so people are going, well, you know, you didn't reverse.
Thank you.
Okay, so you know what I say, Ashraf, to people like that?
Yeah.
I don't expect perfection at the crap table.
Yeah.
Okay,
and
they're looking for a reason for that you did not perform.
Yeah.
People that would ask a question like that.
Dale, here's what I'm going to do. This is the Dow chart, and I'm going to end it. I'm going to end it on the 29th of
October.
Okay. And obviously the 29th. No, I'm going to end it on the 30th because it was a Friday, right?
Right, Halloween, right before Halloween.
Yeah, because it's the last Friday before the election, right? So I'm ending the chart here. And so I'll tell you what happened is that just want to take you to as things happen. And I'm going to talk about the dollar, very, very important later on. But basically, and then we have the WhatsApp group here. I don't know if you can see it. And this is basically what we tell people, you know, be careful, get in, get out, and so on and so forth. And this is what we tell them about Friday. So look at this. Dale, listen, if you're any human being who was in this Dow candle, and we saw this basically this gap, and he sees this, 80% of the people who are listening, if they shorted, okay, if they shorted here at 27, okay, on Wednesday, and they made 500, 600 points, and they made money, right? Even though you tell them that, you know, that definitely it will stop at 26.2, many people are going to try their luck. And you know what they're going to do? They're going to try to retest this, and they're going to say, you know what? I see 26.180. Let's do one more. Let's do one more. And then they end up being stuck. So this analog enables you to either, like you said, you close your shorts early, or you
give it all back.
Or you give it all back, or you start opening longs here, let's say at 26.5, much too early, and then you get nervous here, but then the market respects it. And so for me, I'll tell you what happened. And here I'm going to update the chart now. I'm going to make it current. And this applies for FX a lot. I know the guys are predominantly FX, but so basically, and this is how beautiful this is, all right? It respected this, okay? So this was the 200-day moving average, just like in July. And in 2016, last time it touched 200-day was in July. It's crazy. So never mind. So, and here is what is happening. And then you see this series, this gains of the Dow basically is very similar to what we had in 2016. Sorry. However, I do say, I'm going to tell you what, we issued a short yesterday in the Dow, and I will run you through the analysis at 28.4. So enough of this pattern stuff, enough, let's just change let's change the channel, so to speak. And just in terms of, if you're trading Dow or S&P, when you look at gaps, I recommend looking at the pure cash chart and not
because
using
it closes. Because it closes.
Absolutely, absolutely. Thank you very much. Because it closes, because it is not continuous, because it closes. And I am in, listen, I am in Europe, and a lot of people who follow me, and they trade the CFDs, they trade the rolling cash, they trade where the market is open 23 hours. So there's always a price except for that hour between cash and the futures, and usually, and there's not really gaps. There are some gaps
Right.
sometimes, yes, but if you look at the cash, and as I'll run you through this, is that if you look at the pure cash, you will see a great example, and I'm not going to spend a lot of detail here, but just to show you, in trying to figure out where on earth the high is going to be, or let's just look actually what the, let me just look what the futures is in the Dow, 473. Okay, so it's 480. Okay, so basically, the idea is that let's go through this high. This is the September 2nd high, Dale, of the Dow, and then September 3rd. And if you remember, for the FX guys, September 1st or September 2nd was when the euro went to 120 all the way, and then he said no mas, and then he came down. And we actually had a short because 20 minutes after it hit 120, there was a gravestone doji, and we went short the euro dollar. But look at, let's just look at this, at the Dow. So there is a famous, the famous February gap here, okay? The February down gap, which is basically February 21st. The high obviously was February the 12th. Some people said the 18th, but it was the 12th. And then we start coming down. And then we have February 21st. It was the 20th, it was a Friday, and then we had a gap. The important thing about the boundaries of gaps, they become the levels of resistance and support. And so if you look at this, here on August the 27th, the market officially re-entered the gap. And when you enter gap territory, then your resistance could be up to all the way to the bottom, to the top of the gap, right? So this means that
to fill it.
Absolutely, absolutely. So you can go up and you can go long, and you can put your take profit just below the bottom of the gap, i.e. the beginning of the gap, i.e. before it is considered filled. And if we break above this level, so just trying to tell you what is this level. A lot of people who were anticipating this this webinar were expecting me to talk about yield spread and yield differentials in Germany and the 19th century, because they say Ashraf knows a lot about history, but I'd like to surprise you. I'd like to get into the mundane topic of gaps. So yeah, it's called gap analysis.
Actually, that was an island top, if you want to talk gaps, back there in February, because we gapped up into about 8 trading days and then gapped down. It left like an 8-day island top. See the gap up and then the gap down? That's called an island. And no man is an island, Ashraf.
Yeah. I wonder if Trump is going to find his island now or not, but
I was recommending the Isle of Elba. So he could commune with Napoleon. What do you think?
He actually ran away. I think he left or he ran away from it, and then he went back, and then he died there or something.
Oh yeah. He couldn't say that. Yeah.
So look at this. So you go on top and you fill the gap. So this is what's important. And the level, if you see the price here. So this level is 28.86. So we filled it, right?
Yeah.
We filled it. It is, so people are saying that's it. Oh my God, we're going to go to a new high. But you always have to be, and here is where you have to be suspicious. And you say, are we going to get a false break? Are we going to get a false break? You have your job. It's your money that you're using. It's not anybody's money. It's your job to be responsible and cognizant of the possibility always that your God-given indicator, which you pray to every day, whether it's a gap or it's a moving average or it's a Fibonacci or it's this that is sacred, that you name your daughter after, it's the indicator that you name your dog after or your anything after.
What's your edge? What's your edge, Ashraf?
Well, a lot of these things, but I try to have them work with me, not against me.
Okay.
Because sometimes when you believe too much in your edge, if you misstudy it, or if you approach it wrongly or too much confidence, you will you may get wrong. But let me just finish this thought here. So, but this, you also have to question it. And what happened? We went up, and then what happened the next day? It was a 1,000 point decline. It's like the marathon runner who practiced, and he beat all the odds, and he went to the finish line. He got to the finish line, and he collapsed and he died. So did he consider to have won it? But so you broke. And here, this is yes, it's considered to have hit the high, and either you made your money or you got stopped out. But here is what happened. But what's important, so the reason I'm talking about this is that this was a key level, and in this was a rare instant where you filled the gap, but you did not continue because you had this. And the reason I'm talking about this, so look at this. So I'm looking at the market right now. For me, we went short. So I'll tell you what we did. And I told the guys, we are going basically short around 28,420, and I'll show the premium. So we went 28 short, 28,450, 28,480, and the key, where do you put the stop? Well, we put the stop around 28,890. I know it's a big stop, but the beauty about our WhatsApp group is that we tell people what to do while they are in the middle of the trade. So if the market goes against you, 100 pip, 105 pips, we tell them they can go long partially. And for those based in the United States, they cannot buy one index and they cannot sell the same index, they can go probably into the S&P.
So you'll have them hedge it.
I will have them hedging indirectly. Yeah. So we'll
okay.
And but so this is important, and I'm not going to say, oh, you know what, just put a stop above this gap. No, it's a little bit more refined than that, and I think the next key level is really going to be 28,570, which is basically just around here. I think we're done talking about indices, but let's just talk about. So yeah, this is silver. Let me just tell you something again. One analysis that really worked for us when we went long silver, when it finally broke, and a lot of people said, well, I missed it. And I'm going to speak about why we went in long silver before that will try to give us an idea whether the decline is really over or not. And if you look at the, I did this in the last presentation, and I want to share this with you guys. I don't know if because we didn't have time. So
go ahead, Ashraf.
Yeah.
I'll just remind you, you said you had something to do at the bottom of the hour.
I do, unfortunately. Let me.
Up to you. You're the boss here.
Where is? Oh! This is Zoom. This is not Skype. I have to change the application. So
you want to wrap it, or
let me do it. Can you see it? Can you see the PowerPoint?
Yeah, got it. Then it disappeared.
Oh, okay.
There it is. It's up there.
So basically, I just want to show you. So this was in 8th of May, and I'm not going to talk about these patterns. So this is May, how we went long silver. I'm not going to talk about this pattern, which is very common. A lot of people know it. It was a triangle, all right? Yeah. And here it was gold silver ratio. When it finally fell, that was very good for gold and silver to go higher. We technicalized the gold silver ratio. We technicalized, meaning we sort of technicals. It was beautiful, blah, blah, blah. But there was something additional, okay? Because these things, these triangles, they can give you false signals and so on. You're not sure whether it broke. But this was something, and this is Dale Pinkert. This is called combining, synthesizing the analogs with the moving average. And it's this. So basically, if you look at this, you will see that the daily silver, the 55-month day moving average, the 55-day month, the 55-day moving average in silver.
Yeah.
Once silver breaks above the 55, every 6 months, it takes off. Okay. And when he was touching it, it was at 1545. Okay. It was at 1545. And this is the, and I'm going to go into the live chart. And this is the before chart. This is May 8th. And this is the after chart.
Yeah, nice.
And the RSIs are, you know, and this is another approach. This is called an analog, basically the same idea that happened here. And you don't have to take my word for it. Just look at the live chart. So basically, so it was here, the 55 here, okay? And then we broke it here in December. Just focus on the purple, okay? So we broke, once silver finally decidedly broke, sorry, I'm looking at the wrong one. I'm looking at gold. Okay, let me just get rid of this. Get rid of the.
Okay, there's silver.
Yeah, and I'm going to go in the daily. Because look, I don't want to make this webinar or whatever this is as, you know, just take my word for it. You know, it's the economy, this, that. Listen, we stopped looking at fundamentals after March, after April, when the Central Bank of the United States is an almost a level playing field with all the major central banks in who can, you know, who will pump in more. When you have the RBA and the RBNZ and the BOE every 3 weeks, we're going to open the door to zero rates. Oh, we're closing the window to zero rates, but we're opening the roof to zero rates. And you know, it's like yada, yada, yada. And this is the new approach to try to affect FX or yields by saying how close we're going to be to looking at negative rates or how deep we're going to go into negative rates and so on and so forth. But let's just focus on the prices here. So here's what I'm talking about, Dale. Look at this. You see this? Yeah. These vertical green lines are the lines when silver went above the 55 day moving average. Okay. And I will let you look at it. Take a minute. You know, here. Take a second.
Some nice signals.
We broke and we took off.
Yeah.
We broke and we took off. So this was December, and you can see May, December, June, roughly 6 months, and I can take you back and back.
And we've recently just crossed above it.
Thank you very much. And how many months later? So what is this? This is May. May plus 6 is what?
October.
Well.
No, November. Yeah, November. Yeah.
So is this it? Does this mean that the 6 month? And if you think this is magic, this is voodoo, this is uncanny, this is tea leaves, this is, oh, I didn't go to school to have 4 MBAs and 1 PhD for this guy to come and tell me about gaps and about 6 month moving averages. My kid could have learned that. Okay, fine, whatever it takes, So, but this is something huge. And now let's back it up with the gold to silver ratio, and then we're going to go into silver. So is basically so. And then some people says, oh, wait, Ashraf, I'm not convinced. There is a trend line resistance. Well, I'll tell you why we could be convinced, because let's go at the DXY. In the DXY, there was an important 92.70 level, and it seems that we broke it. Okay, 92.70, it was left shoulder, right shoulder, and we broke it. Gold to silver ratio. Gold to silver ratio. Usually, if it goes down, then it's good for gold and it's good for silver. And if gold silver ratio, if I'm going to show you to you right now, if it broke key technical levels and it's going to continue, that's very good for gold and very good for silver for the dollar. So let's look at it. We're still trying to save FACE, F-A-C-E. Okay, so this is gold silver ratio. So one school of technical analysis, we broke the daily trend line support for the RSI. The other school of technical analysis tells you that you've got some sort of inverted head and shoulder. This is a small shoulder, not very convincing, not very durable, but this is a head. And this is a right shoulder support, which coincides with what, Dale? with the 55-day moving average.
Yeah, right
So
there.
as far as the metal situation, so we've broken the first support. We've broken this support. We are now trying to save one of the all-important support, which is this baby here and this baby.
Yeah.
So in English, a close below 76 or 75 would be pretty bad for the dollar. And why did I say the dollar? Because, you know, whether you want to know whether the dollar is pushing higher or lower is you look at the euro, you look at maybe gold, you look at, but silver, it's the all clear sign. It's the sign that says, listen, I am silver. Once you see me rallying and leaving everyone behind, there are no more doubts about dollar weakness.
So what does this imply? The break of support, retest of the lows or new lows
Okay.
in your view?
Listen, I could be an analyst and I could give you yes on yes, blah, blah, bit, but on the other hand, and I can say, well, let's look at the weekly and let's look at this, and I will go around you and left, and then you
Right.
don't know where you are, and then you
Yeah.
wouldn't even be sure whether I've gave you an answer.
No,
Or I'll
I
give
would
you
know.
an
I
answer.
would know. I've done 1,000 of these.
Or I'll give you a write-off. I think.
All right.
I think silver is going to go back towards the 28. The
Okay.
gold silver ratio is definitely going to go back towards 70. Euro is
Okay.
going to go definitely towards 121, and I think gold is going to go back towards 2050 first of all. But it's going to take a while. It's going to be a very messy road. Not if you want to talk about the fundamentals, not just because Trump may give some surprises. It's not about Trump. It's about the road to this all clear road. And it's not about Georgia. It's not about whether the Dems will be able to get the Senate. There is a small chance they will get the Senate if the two runoffs in Georgia in January, if they fall to the Democrats, and Kamala Harris or Kamala will be able to vote also for the Senate, then she will tip the balance. And then we will have a blue wave. So we will have the blue wave, and if we will have the blue wave, then that would be
The dollar would be the sacrificial lamb.
I'm not, yeah. So that's the theory, and and I'll listen. I'll ask your opinion, and that's what everybody was saying. It will be the Democrats will go for the jumbo stimulus,
Right.
jumbo stimulus. Taxes will go up. The market will go up. But what would happen to yield? And if yields push higher, now I know there's some gold bugs who said it's a reflationary trade. It will be good for gold. But I'll show
Competition.
I'll show you this chart. And here's a chart that I like to watch, to have a look at. Yeah, I have an interview with CNBC Arabia, and they usually do them on Friday. It's supposed to start in 8 minutes. But when I told them that I'm speaking with Dale, they said, "Oh, what, you mean Dale Pinkert?"
Oh, yeah.
Yeah. And they said, "Oh,
Well, we could wrap it here. We could wrap it here so you could prep. You know what I really respect about you, Ashraf, besides your insights and experience, is that you still have the same passion and energy for this business after all these years of being a veteran. And, it's not easy. A lot of people burn out after being in this for a long time. I know I've gone through those periods, but I've never seen you without energy and conviction and passion about what you do. So, so why don't we show your first slide so that people know that they could follow you and look at your service, take up your service, and work with a guy who
I appreciate that.
Yeah.
If you guys have questions, oh wow, there's like 26 chats here. Oh boy.
You have to get going.
But no. I just want to show them a few things. This is an important thing. No, guys, these guys have been doing this for. People are making, each time people make a comment, they have the word Ashraf and coffee in this. I wonder what they're talking about. But okay. Let's just go here. Okay, here, this triangularity you need to look at. Okay, this is the dollar.
Yeah.
Okay, so it's that inverted head and shoulder which we seem to be breaking. All right.
Right.
And Dale, the yellow is gold, and this is yields minus minus inflation. So this is real yield. I use the break even. So this is the 10-year yield minus the 10-year break even. And basically it tells you, this is an indicator for me. When this pushes higher, when real yields push higher, usually gold should come down.
Down, yeah.
It is not happening. So it is not happening, but as you can see here, so either that the inflation is probably not low enough, or there's something wacky with the break even. But this is something that I'm watching. So this is something that I'm watching, and if this is going to be peakish, then it's definitely positive for gold. Let me just show you something else, which is. And something else, I'll give you some tips for you to know about gold, which is something called the Gold Bugs Index. So I'm just throwing things at you guys that you can look and you can test, because I know in today's days and age, we need to be educated. We need to get new tips. Just give me the tip and I'll test it. You don't need to convince me. So one thing is you can look at is the Gold Bugs ratio. And that is the ratio of basically gold divided by the Gold Bugs Index, which is the miners, and it's actually traded in the NYSE.
HUY, yeah.
Thank you very much. HUY, thank you. And when the ratio, when gold comes down relative to to prices, it's the classic questions. What do I do with oil? Do I buy WTI or do I buy BP or Exxon? Do I buy Amerigold or do I buy Randgold or Newmont, or do I buy XAU USD? Right, that's the age-old question. Then people said, well, one is to do with management risk, or the other, blah blah blah. But if you look at this, there is sort of an inverted relation. So basically, when gold start to underperform the gold bugs, then that in and of itself is actually good for gold itself. Okay, and you can test the relationship. I have it here, but you don't need to take my word for it. You can test it, and that's what you have to do. All of you, all of your listeners, this Friday or this Saturday night. Stop reading about the elections. Okay.
Do your homework and prepare for next week. So you're not analyzing on the fly. You're executing next week. So actually, you have to do the work. You can't be lazy and be in this business for long.
A lot of people are asking me about gold. I think we're going to stop today around 1958, 1960. I think we're going to come back down. We need a pullback. But just one last thing. I think we're still short. I think today we're going to have a pullback. We're going to see an exhaustion in the risk off, meaning that stocks may actually pull back later. But I do not think the dollar is going to rally aggressively. Probably it's going to stabilize. But I think, and here is what I think is going to happen. 3 months from now or 2 months from now, the relationship between the dollar and risk on and indices is going to become very weak, just like it became very weak 2 years ago, and then it came back in the last 6 months. It's gonna become very weak, and I think that the dollar is probably going to underperform, probably along with U.S. indices. Some sectors or most sectors are going to underperform their global counterpart. It's very hard to speak about sectors because European banks are almost dead, but those are the key. And regarding sorry, I have to put in my marketing hat and my salesman hat. So basically I mean, listen, the WhatsApp group, if you remember, we go into trades, and I'll give you an example here.
We've got to wrap it.
So basically, this is all the information here. So you can be a subscriber, for a month or 3 months. But if you need to, if you want to be part of the WhatsApp, you have to be either 6 months or 12 months, or you have to have these details here. It helps a lot in, every morning they can get messages from me. They can exchange ideas. But more importantly, we give them actionable trades, and people who are losing money, they come to me and they say, listen, should I, and this is an important question. Basically, it says, listen, Ashraf, I am long this, I'm short that, but I have a loss here. What do I do? And a lot of people, especially in the Middle East, they're very aggressive with their margin. And I say, what's your margin utilization? What can you do? Sometimes I tell them, send me a snapshot. of your phone to show me the situation. And then I say, okay, I said, you can stay in the trade. It's a losing trade, but do not double down. And a lot of people, they think, Ashraf, should I not double down? I tell them, no, don't double down. And they say, that means because you're losing confidence. No, I'm not losing confidence, but do not double down, but stay. And there's a big difference between one and the other. But anyway, okay.
All right. Well, thank you, my trading warrior brother, Ashraf Ladi, everybody.
Thank you very much.
And a lot of pearls today, enough to string a necklace. And I hope that you and your family remain untouched, Ashraf, and you have a great fall trading season. Let's do it again down the road.
Same to you. Same to you. But keep it up, Dale. And thank you.
All right.
Thanks to the team.
Thank you, my friend. Everyone. All right, everyone. That's a wrap. Have a great weekend. Remember, don't just count your pips, count your blessings, and we'll see you next week. Adios.
Adios.